C3.AI just posted something remarkable. Their federal bookings exploded 89% year over year, even as total revenue declined. The stock ticker symbol is AI, and the federal government is suddenly betting big on this enterprise AI platform. Here's what happened in their second quarter of fiscal 2026. In today's video, we're analyzing C3.AI's results for the quarter ended October 31st, 2025. We'll examine, first, the financial results. Revenue declined, but losses widened significantly. Second, the massive shift toward federal business and what's driving it. Third, the partner ecosystem that's generating 89% of bookings. Fourth, the company's guidance and path to profitability. And finally, what management is saying about the future. Let's dive in. Let's start with the headline numbers. Total revenue for the quarter was $75.1 million. That's down 20% compared to the same quarter last year when they reported $94 million. Subscription revenue, which is their core business, came in at $70 million, down 13% year over year. That subscription revenue represents 93% of total revenue. The GAAP net loss was $105 million, or 75 cents per share. On a non-GAAP basis, which excludes stock-based comp, here's what's happening with the revenue mix. Subscription revenue of $70 million was down from $81 million last year. But there's another component called prioritized engineering services. These are custom feature developments that customers pay extra for. This brought in $4 million, down from nearly $10 million last year. Regular professional services fees were under $1 million. So, if you combine subscription plus prioritized engineering, you get $74 million, which is 99% of total revenue. Now, here's the concerning part. While revenue fell 20%, gross margins collapsed even harder. This is critical to understand. GAAP gross profit was just over $30 million, giving them a 40% gross margin. That's down dramatically from 61% in the same quarter last year. On a non-GAAP basis, removing stock compensation expenses, gross profit was $41 million with a 54% margin, still down from 70% last year. The operating loss on a GAAP basis was $112 million compared to $75 million last year. Non-GAAP operating loss was $42. But here's where the story gets interesting. C3.AI is rapidly transforming into a federal contractor, and the numbers are stunning. Federal bookings grew 89% year over year and now represent 45% of total bookings. That's up from 35% last year. The company closed 46 agreements in the quarter, and they're winning business across multiple agencies. New customers include the Department of Health and Human Services, the Department of Defense, which they're calling the Department of War in the Filing, the Intelligence Community, the Army, Naval Air Warfare Center, Naval Sea Systems Command, the Marine Corps, and Los Alamos National Laboratory. What's driving this federal surge? The government is mandating a shift from custom-built GOTS solutions, that's government off-the-shelf, to commercial COTS products. C3.AI is positioning itself as the commercial AI platform that federal agencies should adopt. And they're doing this through systems integrators. Booz Allen Hamilton, one of the largest federal contractors, just joined C3's Strategic Integrator program. They're licensing the C3 platform to develop COTS-compliant solutions. This is the classic. The federal wins are part of a broader pattern. C3.AI barely sells directly anymore. Almost everything goes through partners. 89% of total bookings came through the partner ecosystem. The company closed 38 partner deals in the quarter. The partner pipeline grew 108% year over year. Let's talk about the key partnerships. Microsoft and C3 just celebrated their first anniversary together. They've closed over 100 customer agreements across 17 industries, generating over $130 million in bookings for C3. In this quarter alone, they closed 24 joint deals. The Microsoft qualified bookings increased 49% quarter over quarter, driven by larger deals. The company closed 17 agreements over $1 million and 6 over $5 million. By industry, federal defense and aerospace was 45% of bookings. Pharmaceuticals was 18%. Logistics and transportation 8%. High-tech 7%. Energy and utilities 7%. So there's some diversification beyond federal, but government is clearly the growth engine. For new production deployments, the C3 is pushing hard into generative AI. They closed 8 new or expanded generative AI deals in the quarter, including with the intelligence community, Cargill, Bristol-Myers Squibb, and Track Intermodal. State and local governments in New Jersey and Tennessee deployed C3 generative AI into production. The company launched C3 AI agentic process automation. This is a new product that lets users describe complex workflows in natural language, and the system automatically builds and deploys them as AI agents in minutes. So federal is booming and partnerships are accelerating. But here's what management is telling Wall Street about the near-term outlook. For the third quarter of fiscal 2026, C3 is guiding to revenue between $72 and $80 million. At the midpoint, that's $76 million, down roughly 23% year over year. They expect non-GAAP operating losses between $44 and $52 million. For the full fiscal year ending April 30, 2026, revenue guidance is $290 to $310 million, down roughly 23% at the midpoint. Full-year non-GAAP operating losses are expected between $180 and $211. Here are the key takeaways from C3.AI's quarter. First, revenue declined 20% as the shift to consumption-based pricing continues to pressure near-term results. Second, federal business is exploding, up 89% year over year and now 45% of bookings. The government mandate to use commercial software instead of custom builds is a major tailwind. Third, the partner model is working. 89% of bookings through partners with Microsoft and AWS. That's the analysis of C3.AI's fiscal second quarter 2026 results. If you found this breakdown helpful, please subscribe to the channel and hit the notification bell for more earnings analysis. Remember, this material is for educational purposes only and does not constitute investment advice. Investing in stocks carries the risk of capital loss. Always consult with a qualified financial advisor before making any investment decisions. Thanks for watching, and I'll see you in the next video.